Aloha, everyone. I hope everyone had a wonderful Christmas and New Year's holiday season, Hanukkah season, what have you, holiday season, whatever floats your boat. Me, I'm indifferent, I'm neutral, whatever you want to call it, you can call it that. And it was a great time over here. We were slacking on the videos because overall the market was in a slow, steady uptrend on lower volume. And while volume did increase each day along the, slow step higher, there's no point in making videos. Seriously, you guys got better things to do. But here we are again because we've started off the new year on a down note. Starting off with the New York Stock Exchange, you can see we sold off 1.12% on volume that was heavier than the day before. Granted, it was below average volume, so we have to, take this sell with a grain of salt. But still, if we compare to how we began the beginning of the year, the previous year, with the S&P 500 gaining 2.54%. If we could say that that was an omen for the year to come, it was quite, plausible. Now, if we say that today is an omen for the year to come, then we can quite say it's going to be a slightly negative flat year. So we'll see if that rings true. However, the first day of the year has always been pretty important to me. However, late in trends, I have noticed that we continue to go higher and then we, top out in February and sell off. This happened in 99, for instance, happened in 2004, so 2005 also. So, there's instances that I can clearly remember where we did start off the year on a decent note and then did not do well, or did do okay, but just not spectacular. So it's not necessarily going to happen, but it's never going to start the year off down. NASDAQ, as you can see, clear distribution day, and the Russell 2000 also, once we figure out what to do here, down 1.11%. And like I said, I began a very tiny hedge in the Russell 2000 on 12/27 when we finally had a down day following a retest of that uptrend line. Now we have a real down day. So tonight what I'm going to do is I actually have 4 sells, and I'm going to go ahead and take the capital raised from those. I have to wait till the morning because my sells have to trigger in the morning, and then I can go in and manually enter my hedge in SRTY, as that's the one that I will be taking off a failure of the uptrend line in the Russell 2000. IWM, same thing. But we have partial sells in UEIC, very heavy volume close below the 50-day moving average. Relative strength, money stream looks like it's rolling over, and so does price. And there's a ton of big red distribution bars since October. So I have to take this signal even though we are above the December base lows. So normally if we didn't have this many red bars in November, December, I wouldn't make this a 25% sell. But given the weekday, this price action, relative strength, money stream line down here, the yellow and white line, and also if you look here, the MACD line, or TSB, excuse me, is also in confirmation of the money stream relative strength. However, the MACD does indicate that it might not be as weak as we think. As you can see, it's got a very positive divergence between the old price highs, but still I'm not going to hold because of that. Also, EIG, very harsh, heavy close below the 50-day moving average on heavier volume. You can see via the relative strength line, compared to the market, this stock is extremely weak, so no matter what, 25% of this has to go. Also, CMG, the first time it's violating the 50-day moving average on heavy volume, that is indeed a 25% sell. So CMG, we got to get rid of 25% of that. And then the only other sell is GMED. We went long this morning, and we got to get out of it, basically. Not going to get out of all of it, because like I said, my final cut loss was here, 1947. However, now based on the current price action, I'm moving that up to 1967, so adding another 20 cents to that. So it closed below 1967, and I'll get out my full ad. However, remember, this was a very small ad because I'm out of cash, out of capital. So really, cutting this one short, not a big deal. So it's a 75% sell today. Why 75%? 50% for it closing below the open of 1992, and another 25% because it's nearly closing below the 1971 low a day, and because volume's heavier than the day before, and BOP went from green to yellow. So that's why that's got to go. And like I said, all that capital in the morning will go into SRTY as a hedge. I wouldn't be too quick to say that, oh, here we're definitely going to go down and test the lower, upper trend line, which is the lower end of the range, which is very plausible, or end of the 200-day moving average. But that being said, solar stocks did great today. There's 10 overall, but SPWR, YGE, CSIQ, and FSLR are just off the top of my head. Great moves, so it's kind of hard to be really, and Plug. Jesus Christ, Plug. To be honest with you, this thing came into my radar back here, so damn it, right there. Damn, what a miss on Plug. How much are we up from that then if we would have taken that signal? 184%. Damn. Oh well. What are you going to do? 184% gain. missed. But it's okay. Break out to a new high, heavier volume. Bop surge, didn't go to max green bop, and I'm just going to change some up 10%. But overall, as you can see, it's not that bad out there. And then you saw Bank of America today. I mean, that can't be a sign of an unhealthy market. So it looks like it's just one day in a pullback. One day does not make a trend. We will see how we continue through here. Like I said, if we continue to sell off each down day, we'll continue to add to that hedge. The rest of the account capital each session, add to the hedge, add to the hedge, add to the hedge. All right, everyone. Have a great rest of the 2014. Day one is in the books. Aloha.